During a recent congressional hearing, several interesting discussions took place involving the U.S. Treasury Secretary and lawmakers. The conversation highlighted growing concerns about global economic competition, financial stability, and the evolving role of asset markets in shaping investor confidence. One key theme raised during the hearing was the importance of maintaining strong asset prices, particularly in U.S. stock markets. Policymakers often view rising markets as a sign of economic confidence, which can encourage both domestic and international investment. Recently, the Dow Jones Industrial Average crossing major psychological milestones has attracted significant attention, with some political leaders presenting strong market performance as evidence of economic strength. However, economists frequently debate whether rising stock markets always reflect underlying economic growth. In many cases, market performance can also be influenced by monetary policy, government spending, and global capital flows. For example, strong fiscal spending or low interest rates can increase liquidity in financial markets, which may push asset prices higher. Some analysts have speculated about long-term projections suggesting that U.S. stock indices could continue growing significantly in the future. While such growth is possible, achieving extremely high returns within a short period would typically require strong economic expansion, productivity improvements, or continued monetary support. Historically, sustained high annual returns are uncommon and often associated with unique economic environments. Another important topic discussed during the hearing was the role of financial participation among American households. Officials emphasized expanding access to equity markets so that more families can benefit from long-term economic growth. Increasing retail investor participation has been viewed by policymakers as a way to promote wealth building and economic engagement across different income groups. At the same time, critics argue that government policies designed to encourage investment participation should be balanced carefully to avoid creating unrealistic expectations about guaranteed market performance. Financial markets inherently involve risk, and long-term success usually depends on diversified investment strategies and sustainable economic fundamentals. Beyond domestic policy, the hearing also addressed growing global financial competition, particularly involving China's efforts to expand its financial infrastructure and payment systems. China has been developing digital currency technology and cross-border payment networks as part of broader initiatives to modernize its financial system and facilitate international trade. China's digital currency programs, including experiments with central bank digital currencies, CBDCs, aim to improve payment efficiency and reduce transaction costs. Some policymakers in the United States have expressed concern that alternative payment systems could gradually reduce reliance on traditional international financial channels that have historically been dominated by Western institutions. In recent years, there has also been increased use of local currencies in international trade agreements. Several countries have explored bilateral trade settlements using domestic currencies instead of relying solely on the U.S. dollar. While the dollar remains the world's primary reserve currency, financial diversification trends have been gradually developing across global markets. Another factor often discussed by analysts is central bank gold accumulation. Several countries, including China, have increased gold reserves as part of broader reserve diversification strategies. Gold is traditionally viewed as a long-term store of value and a hedge against currency volatility. However, there is currently no official confirmation that any major economy plans to fully back its national currency with gold. Global financial markets continue to evolve due to technological advancements, geopolitical competition, and changing trade relationships. The development of digital currencies, new payment networks, and shifting reserve strategies could gradually reshape international finance over time. However, most economists agree that such transitions typically occur slowly due to the complexity and scale of the global financial system. The U.S. dollar continues to maintain a strong position due to its deep financial markets, global trade integration, and institutional stability. Nevertheless, policymakers are increasingly monitoring alternative financial systems and technological innovations that may influence the future balance of global economic power. Ultimately, the future of international finance will likely be shaped by multiple factors, including economic performance, technological innovation, geopolitical relationships, and investor confidence. While competition between financial systems is growing, global markets remain deeply interconnected. As these developments continue, investors and policymakers around the world are watching closely to understand how financial systems may evolve in the coming decades.